You have $30, not $3,000, not a windfall, not the kind of number that makes people lean forward when you say it out loud, not an inheritance, not a bonus, not a sign that your season has finally arrived. Just $30. The kind of money that disappears without a confession. It becomes a meal you barely tasted. It becomes transport. It becomes an impulse at the checkout that felt justified for about 11 minutes. It becomes a subscription you stopped using but never stopped paying. And because it is small, you almost don't respect it. You ask the question almost everyone asks. What can $30 really do? That question sounds reasonable. It sounds like logic. It sounds like the voice of someone who has thought it through. But it is not logic. It is the old life, already working against you, already building the argument that your future should wait until the conditions are better. Most people ask that question once, nod at the answer, and spend the money. You ask it differently. You open your phone. You find an investment account. You choose a simple, low-cost fund. You read the warnings because this is real money, and real money does not come with promises. Markets rise, markets fall. Markets sit still for months while your patience develops cracks. Nothing here is guaranteed. Nothing here is magic. You understand that. Then you set the number. $30. Every 7 days. Not when inspiration visits. Not when your income finally looks impressive. Not when the economy calms down or the timing feels right or life stops being expensive. Every 7 days. You press confirm. The ceiling does not open. Your future self does not appear to thank you. The account does not glow with the quiet satisfaction of destiny being unlocked. It simply shows a small number sitting in a small balance like a seed pressed into dark soil with no evidence yet that anything will grow. That is the insult of the beginning. You did something important, and it does not look important yet. 7 days pass. Life tries to reclaim the money. Something comes up. Something always comes up. A bill arrives with bad timing. Food costs more than the plan allowed. A friend invites you somewhere, and your mind starts its old negotiation. Skip this week. It is only $30. You can double it next week. That is how the old life speaks. Not in catastrophic declarations, not in one dramatic moment of surrender, just in small, soft suggestions. Just in the language of reasonable delay. It never asks you to abandon your future in one grand act. It only asks you to postpone the small things until postponement becomes your personality. Until one day, you look back and realize you spent a decade making reasonable exceptions. But this time, you do not negotiate. The second $30 goes in. Then the third. Then the fourth. After 28 days, you have invested $120. That is not wealth. That is not the kind of number anyone would admire. But something has happened that does not show up in the balance. A pattern is alive, and a living pattern is more powerful than a large intention. Because intentions are beautiful until rent is due. Intentions are brave until your friends are spending freely and the night looks inviting. Intentions are loud at midnight and weak by morning. But a pattern does not ask your mood for permission. It just repeats. 1 month becomes 2. 2 becomes 3. By 6 months, you have made roughly 26 transfers. You have contributed about $780 before any returns. The account may be slightly above that, slightly below, or almost exactly where your deposits placed it. And this is where the romance dies for most people. Because 6 months of discipline can still look small. You expected the habit to feel powerful by now. Instead, it feels normal, quiet, almost invisible. Nobody has noticed the change in you. Nobody has applauded the transfers. Nobody has said, I can see your future shifting. You are just a person moving $30 every 7 days into a place where it can work without an audience. And that is why most people stop. Not because the plan failed. Because the plan is boring before it is beautiful. They wanted evidence. They wanted momentum they could feel. They wanted the habit to announce itself. But the first evidence is never the money. The first evidence is that you are still here. At some point, the market drops. It always does. Your balance turns red. Numbers you watched grow quietly begin to shrink. The headlines get loud. People who never understood markets suddenly speak with authority. Someone says it is over. Someone says the smart move is to wait until things stabilize. Safe. That word has buried more financial futures than risk ever did. Because waiting for safety sounds like wisdom. It wears a clean shirt. It speaks slowly and references uncertainty. But most of the time it is just fear using the vocabulary of caution. You feel it, the tightening. The discomfort of watching something you built begin to shrink. You are not a machine. You are not pretending this feels neutral. But you remember the rule. This is not a promise. This is ownership. And ownership comes with weather. So 7 days pass, and the $30 goes in again. Only this time, prices are lower. Your money buys more than it bought before. You do not celebrate like someone who saw it coming. You do not tell anyone. You simply continue. That is the entire difference. The amateur waits for certainty. The builder stays in motion. Year 1 arrives. 52 weeks. 52 quiet decisions. You have contributed $1,560. The account sits somewhere close to that number, a little above or below depending on how the market moved. But the number is not the main story. The main story is that you kept a promise to yourself for 52 weeks without a standing ovation. You acted when the amount felt embarrassingly small. You continued when the reward was invisible. You discovered, week by week, that your life did not collapse because $30 left your spending every 7 days. You thought the $30 was load-bearing. You thought your week needed it. But it left, week after week, and somehow you adjusted. You made sharper choices. You became more awake inside your own money. You started noticing leaks, little expenses with no memory attached, purchases that gave you 5 minutes of pleasure and 3 days of nothing. Habits that looked harmless individually but were eating your future grain by grain. Investing the $30 did not just build the account. It exposed you to yourself. Year 3. About $4,680 contributed. The account, at a reasonable long-term return, may be sitting close to $5,000. It depends on the market. Returns do not obey your calendar, but the account has weight now, not life-changing weight, not enough for speeches, but enough to feel real. The number no longer looks like a joke. It looks like proof with a pulse. And the habit has become invisible, not because it is easy, but because it is simply what you do. Like locking the door. Like paying a bill that belongs to your future. Year 5. $7,800 contributed. The balance, if returns have been reasonable, may be somewhere around $9,000 to $10,000. The gap between what you put in and what the account has become is visible now. That gap has a name. It is called compound growth, and it is beginning to carry weight beside your deposits. You think about the other version of you, the one who spent the $30 every week instead. That version is not miserable. They laughed, they spent freely, they lived. But they have nothing accumulating. They have no gap, no machine, no distance between where they started and where they are now. You did not escape your old life in one dramatic leap. You outgrew it in weekly increments. Year 10. $15,600 contributed. At 7 to 10% average annual return, the account may sit somewhere between $22,000 and $27,000. Now the number changes how you stand. Not freedom, not retirement, but breathing room. And breathing room is not a small thing. It means one bad month does not erase you. It means an emergency does not automatically become a crisis. It means you have choices where you used to have panic, options where you used to have no ground to stand on. That kind of money changes your nervous system. You stop moving like every problem is chasing you. You start thinking longer. You become harder to pressure. Because desperation has less access to you now. Year 20. $31,200 contributed. With consistent compounding, the account may sit somewhere between $68,000 and $108,000. Time is no longer hiding. The growth is visible. The returns from your earliest deposits are now standing beside this week's deposit, working in the same direction. Your old money is helping your new money in a way that feels almost unfair to people who never started. The people who see the account now will call it luck. They were not there for the 1,040 decisions. They did not see the weeks you wanted to stop. They did not watch you close a red app and reopen it 7 days later with the same $30. They only see the result, so they build a simpler story. Let them. You know the route. Year 40. 2,080 weekly transfers. $62,400 contributed over a lifetime of small, repeated choices. At a 7% long-term average, the account could sit well into the hundreds of thousands. At 10%, significantly higher. The exact number depends on returns, fees, taxes, timing, and whether you stayed in when staying in was uncomfortable. So this is not a guarantee. Life is more complicated than a calculator, and anyone who tells you otherwise is selling certainty they do not own. But the truth is still standing. Small money, given time and consistency, can become something most people will never expect from a beginning this quiet. And even if the final number shifts, the person you became along the way is not theoretical. You became someone who acts before the amount feels impressive. You became someone who respects repetition. You became someone who understands that wealth is not only built in dramatic moments. Sometimes it is built in transfers nobody sees. In red weeks you endured quietly, in ordinary Tuesdays that added up to an extraordinary outcome. The world teaches you to worship the big move, the big salary, the big break, the big opportunity that changes everything overnight. But life is mostly shaped by what repeats. Your repeated spending becomes your lifestyle. Your repeated avoidance becomes your regret. Your repeated discipline becomes your way out. $30 every 7 days will not make noise in the beginning. It will feel too slow, too ordinary, too small to mention. But ordinary is where most people lose. They are waiting for the perfect moment while time is already leaving the room without them. You do not need a perfect moment. You need a repeatable move. Not a guarantee, not a promise. Just a truth that most people meet too late. The future does not care whether your first step was impressive. It only asks whether you kept walking. So start with the $30. Let the beginning look foolish. Let the middle feel silent. Let the years do their quiet arithmetic. And one day, when the balance finally has weight, and people ask how something this large came from something that small, you will know the exact answer. It was not luck. It was not one perfect decision made at the perfect time. It was one small decision that refused to die. This channel is for people building quietly, one decision at a time, until the results become too large to ignore. Subscribe if you are done waiting for the perfect moment.